incredible week. Unbelievable. Joseph from Ascending Capital. How you doing?
Hey, man. Hey, Ben. How's it going? We're doing good.
Awesome. We had another week of just killer, unbelievable calls. We have to just jump to the live action right now. What's going on with XXII? We called XXII at $2.50. All right. We called it on our show 2 mornings ago with a initial target of $4. All right. It broke the $4, so we got back in after it broke 4. 4 was the 20 DMA. So we got to move to 28. By the way, how do we do this? Story trading style. We're not only looking at technicals. We're looking at catalysts, fundamentals. We have a good understanding of this company. We've interviewed the CEOs. We know the strength and the meaning of the catalyst. So we're getting ahead of technical breakouts. That's what story trading means. It's understanding market price action so you don't have to wait for lagging indicators. So XXII, we anticipated the move from 250 to 4. Technical breakout at 4, and now the technical target is at least $6. $6 probably. We got candle resistance at about $6.12. The 50-day moving average is about $6.78 and dropping. This has just been an unbelievable ride. I'll pause there for your feedback.
This is incredible, Ben. I mean, you know what this is? This is like back in the day, like maybe a few years ago, I used to look at trades like these and I'm like, shit, you know, I wish I would have been part of this trade and trading it.
Part of it.
And now I'm looking at it and I'm like, it's up 100%, up 50%. What do I do now? What I love about story trading, we've been in these plays like before the big moves, man. XXII has been beautiful for 2 days in a row. DWAC, whatever, we'll get to the others soon. But I love the conviction, man. And, you know, it's also like being convicted to add shares at like $4. You know, I was adding shares at $4. When it hit $5, I'm like, okay, now it's going to 6. I added more shares. So yeah, loving it, man.
It was beautiful. It was really unbelievable. And XXII, we've known for a long time, actually lost a lot of money on it as a long-term hold. And then I got out of it as a long-term hold at 275, but we followed the story and we got back in at 250. Right, we got back into 250, and we've made up, at least for the hedge fund. And by the way, for those of you who are new here, so at Story Trading, I hooked up with Joseph Levy here, and we set up a hedge fund called Ascending Capital, which is based off the story trading analysis, story trading style. We have a pre-market show for our paid VIP members every morning at 9 a.m., and a lot of the activity in the hedge fund is based on our morning 9 a.m. show. So we get on here every single morning at 9 a.m. for about 20 minutes, sometimes 25 to 30 minutes, and we do a full analysis of catalyst, sentiment, technicals, and fundamentals, and we give you our predictions for the day. And these morning predictions are so uncannily accurate, it's just ridiculous. Honestly, most people probably think our hedge fund should be up like 1,000%. Probably should be.
Yeah,
but
should
you know, like we're only 2.5 months in, and we're being cautious. And most of the hedge fund is in long-term holdings that are just sitting there, right? Most of them are like in Tesla, Nvidia. We're getting hit hard in those. So we only have a portion of the fund that's dedicated to trading around the morning show ideas. But the more we're proving this out, we're going to increase our allocation to those morning show ideas as we go forward, as our process gets better and better and more reliable. And, you know, it's just going to lead to tremendous outperformance. We are definitely outperforming the market this week. And let's see, probably today, we're outperforming all the major indices today as well because of the strength of XXII.
That's what I like to see, man. That's what I like to see.
It seems like, hey, why aren't you guys up 20, 30? You can't do that. When you have a hedge fund, we're in 30 positions. Our max size position is like 5%, right? So it's not like running your own money and you're like 20, 30, 40% in, and it's exciting. You can have 30% days, but we can't do that with a hedge fund. You got to be risk. It's all about risk management and proper.
And I got to say, by the way, I think in the long term, we'll beat those guys that go 30, 40% or all in one position. I think in the long term, we'll beat them.
Oh, absolutely. Absolutely. We're not going to have the risk that they have, and over a long term, we will. So what else? What else were our picks? I mean, I got to jump to DWAC because, no, I can't. To tell the story about DWAC, I got to tell you a story about PSQH. So PSQH, I don't have the full chart here on my phone because it's a DSPAC and my TD app doesn't have it. But we spotted this, was it 2 or 3 days ago at $10.50? I think it was 3 days ago.
Yeah, it was like 3 days ago, yeah.
So at $10.50, we made it a trade alert. We put it out on our app. Oh, by the way, if you want to be a VIP member, you go to storytrading.com/app. You download the app. It's a free download. If you want to be part of our VIP community, there's a 1-week free trial. Then it's only $30 a month after that, which is a steal. People are telling me I should be charging $50 to $100 for the value we offer. But in any case, in the Story Trading app and on our morning show, we gave the alert at $10.50 on, it wasn't called PSQH then. What was it called? CLBR.
It's called CLBR, yeah.
And why did we do that? Because we saw catalysts, right? Where we saw catalysts that they did a deal with Tucker Carlson, that they would be the first advertiser on Tucker Carlson's show starting in August. They did a 7-figure buy, and that was the alert. And I did a little more research. I did fundamental research. We found out that the DSPAC was this week. I found out that Donald Trump Jr. is a shareholder and has been, pumping the heck out of it over the last. So we got in at $10.50. And had an expectation, hey, let's get out at around $16. It ended up going to $35, and we got some of that ride because we saw the strength. We saw the technical strength, and we didn't sell all out at $16.50. What was our highest sell on PSQH?
I think the highest sell was like 33. 32.80, 33. I think that was the high, yeah.
Right. And for our VIPs, we did a fundamental analysis on Wednesday at 12 p.m. Every Wednesday at 12 p.m., we do a show with Chris Tuttle from SPACVest. We did a fundamental analysis with him, and I think we both agree that PSQH is probably worth less than $10, right? So that's what the fundamental point of view, that keeps us in check and make sure we get out on the pops, all right? So it's very important to look at it from all angles and understand the risk. And by the way, our size was small on this because it's risky. It's not good fundamentals. So we had only like 1% of our entire hedge fund was in PSQH. Stocks like this, stocks like DWAC and XXII, it's like 1% of our entire hedge fund are in stocks like that. But man, sometimes what if we put a 2 or 3%? Oh my God! But no, like we gotta have rules. We gotta have rules. So.
Yeah, and I have to say, Ben, I think one of the best parts for me about this trade was when we got out. Looking just at today, down 23%, I think we timed the exit beautifully. Like we got out of most of it. Yeah, PSQH. We were out all of it by the end of the day yesterday, and then we added a little bit because we were like, but we timed it very well. And look at DWAC.
Nice. Very good. I see we just saw some DWAC at 2030. And then what happened was we saw an opportunity to get all out of PSQH and into DWAC because he had a similar type of cattle. This is all the Trump trades, and there's a lot of, you have to understand the psychology and the sentiment around them to understand why there's a sentiment premium in these stocks. We can't get into all of that right now. But if you were following the story on DWAC, you would have known that there was an SEC investigation. This was on our radar, and the merger with Trump, Truth Social, didn't happen yet. It was being delayed for other reasons, but also one of the reasons was the SEC investigation. So last week, what's that? What do we?
Yeah, that was covering on a call because we're going down on the DWAC shares.
Okay, all right. So anyway. So we knew that they had a oral settlement with the SEC, $18 million that we had heard about last week, but it was an oral settlement. It wasn't finalized. Last night, it became finalized. And we just saw, so this is where we do multidisciplinary approach, right? We'll play a video at the end of how Story Trading does it. We're looking at sentiment, catalyst, fundamentals, and technicals. We put it all together for a holistic understanding of why the price is where it's at right now. The whole impetus behind why we created Story Trading was, a lot of people are out there and say markets don't make sense. They're illogical. They're inefficient. If you have someone who's a pure technical trader, they say they might come to that conclusion. If you have someone who's a pure fundamental investor, they might come to that conclusion. If you have someone who's a pure sentiment trader, they might come to that conclusion because the prices never make sense if you only look at it from one angle. But if you look at it from all the angles, you understand that the market is made of many participants who look at stocks differently, right? Then you can understand why a stock is trading where it's trading at. And I call that market efficiency. I believe today's price is always the correct price. And it's a reflection of the net aggregate opinion of all market participants. And if you strive to understand why a stock is priced where it's at today by considering what we call the 4 pillars, sentiment, catalyst, fundamentals, and technicals, then you're equipped to make predictions of 9 a.m. show is all about. It's taking that catalyst in the morning, interpreting it based on the research you've done on the fundamentals. Is that catalyst? What kind of impact will that catalyst have on sentiment? What kind of impact will that catalyst have on fundamentals? Then you say, is it a net positive impact, a net negative impact? And then you take that, you translate it on the chart, and you figure out your price targets, your supports, your resistances, and you come up with a trade plan. And what's beautiful about it and it's proven out, because we believe markets are efficient, what ends up happening is you get rapid re-ratings in 1 day, in 2 days, in a few hours. The market catches up to quickly to where it should go when you understand where it should go, based on the net aggregate opinion of all participants. That's the correct price. That's the true price, not what some fundamental analyst says on a spreadsheet to say the correct price is X and we're undervalued. That's not the correct price, sir. Okay, and I'll say the same with the technical trader, catalyst trader. Sentiment matters. Sentiment is part of market efficient value. All right. So in any case, this is what we do here. I got to say, we're probably experts at this. I don't know that anyone does this better than we do. So in any case, DWAC, we're looking to get out by end of day. I don't like the fundamentals.
By the way, Ben, I just want to say, that's what I love so much about story trading, is that when you're part of the community, you get to a level where you're able to make sense. You're not just trading blindly and following charts or whatever. You're actually making sense of the moves, and it gives you a better idea of how to trade it and have conviction or not, and when to bail and when to not. So I think that's the biggest thing for me about story trading, which is why I loved it and I pushed for the hedge fund with you, is because I learned so much, and I'm actually not sitting here blind. I'm actually understanding what I'm doing, and I love that.
Yep, and DWAC right now at a little technical resistance level. We don't have big size in this anymore. Now, sometimes my analysis will be incorrect, and that's why you do risk management. That's why you manage your size. So with DWAC, my thesis is that the fundamentals behind DWAC, not as good as they were with PSQH, okay? And it's not just a pure fundamental analysis, but it's also when PSQH is a new company. It's just come out. Very few people have heard of it. It's all like rosy, right? It's a rosy scenario. I never heard of this. I'm only thinking about the positive. Like, how high can this go? How great can this company, Public Square, be, right? So you have that fundamental view, and that gets built into the market price. There's a value to that asset because of the hope and the speculation that they could be successful. DWAC, that's like an old story, right? We know Truth Social has been out for a long time. People now have developed theses of how much could this be worth? How successful can it be? And then also what happened is in the meantime, since it had that run to 175, Elon Musk bought Twitter and stopped censoring. So now there's less of a demand for a Twitter alternative in the marketplace. So those are all put into like the fundamentals of what DWAC can be worth. So, and fundamentals, partially sentiment, what I just described there. So I have a bias that like I want to be out today on DWAC. So we are going to be out today. But it's at a technical resistance level here. So we're just going to be careful. At this point, we have small size. We're watching the technicals. We're in at 16, so we're in a profit. We're just going to look for our exit by end of day today. And it doesn't mean it can't go and do a DWAC 2.0, $30, $40, $50. Anything's possible in the stock market. But everything's a calculated bet based on the research we've done. Look at XXII. It's heading back towards the high.
XXII is incredible. I know.
It's such a beauty. Let's go look at this chart again on XXII. Nice little scalp sell there, 2050 on DWAC. Good job. So XXII, $5.55. You can see very clearly this 20 DMA breakout. I remember yesterday you asked me when we broke 294 on the morning show. We gave the folks 294 is your breakout level. If it breaks out 294, $4 is your target. We documented it. It's on video. It's on text. The high of day was $4 yesterday, right?
Yeah, to the penny.
Okay.
Yeah.
And then this morning, when it broke out at the 20, you asked me again, you're like, well, how convicted are you that it's going to go to your next target? When the next target I gave was $5 at the time, right? It was $5 and then like around 7 is what I said. And like, actually, I'm even more convicted than yesterday. And I think that surprised you a little bit. And the reason I was more convicted than yesterday is because the 20 DMA broke. And that's much more meaningful than, a move to the 20 DMA. Breaking the 20 DMA, now your next target is roughly that 50 DMA. That's $6.89, but that's a declining moving average. Doesn't mean you get there in one day, and that's going to be going. That's going to be lower tomorrow. So then you look to candle resistance, and when you look at candle resistance, we saw some resistance of $5, but we also see now some resistance at $6. Really, the whole numbers here: $4, so $5, $6, and then around $7.
Yeah.
Why do we sell some overstock? We overweight.
I picked up some trading shares this morning. Again, just listening to the show, and you liked overstock. I think it was top 5 overstock.
We'll talk about it. All right, we'll get to overstock. Well, this morning on the show, we'll get to our top picks. We only really had like one top pick, and the rest were all kind of bunched together. So like our top picks are never penny stocks. We always go with the big caps first. We say out of the big caps, our top pick was SMCI. We'll get to it. Then secondarily after that, we gave you a group of stocks we thought could outperform today. Those were RGB, Chewy, Exact Sciences, UAL, IBM, and Overstock. So that was a group of 1, 2, 3, 4, 5, 6. Now, if you take the average of those 6, is it beating the markets? Yes, they're crushing the markets. Okay, the average of those 6. But RGB, Chewy didn't work out yet. So those were a big cap pick. So it was SMCI number 1, and then this bucket of stocks number 2. And then what was our number 1 pick this morning? Do you remember? For the risky stocks, it was DWAC.
DWAC. Yeah.
It was DWAC and then XXII. It was those 2.
Yeah.
So we gave you DWAC and XXII this morning. So it's been like,
and it's incredible, Ben. It's incredible, Ben. Even with a small allocation in these risky stocks, how you can beat the market. Like overall, it's incredible. Yeah,
it is incredible. Like, and that's the mistake you make with your own. I did this with my own money.
I did it too. Believe me.
I imagine almost everyone does it when it's their own money. They're like, I don't have to answer to anyone or whatever it is. It's like, let me just take more risk. I'm really excited. I'm just thinking about how much money I can make, not how much money I can lose. Like, there's all these pitfalls when you manage your own money. So, like, starting this hedge fund has been great because I'm not thinking like that anymore. I'm like, it's a business. Yeah. I'm managing other people's money. I got to have rules. I got to have risk management. You know, God bless the people who can do that with their own money. I can't. Like, my personality, I can't do it. If it's my own money, I'm swinging for the fences, man. You know, and I used to tell people, I'd go to my shows before the hedge fund went. I'm like, this is really risky. Yeah, like, you should only have a small allocation in this, probably. I have a 40% allocation, right? Well, you shouldn't do that. And I'm like, you shouldn't do that. And sometimes I got killed, right? And sometimes it worked out. But that's not the way to do it. But it's very tempting when it's your own money to do things like that. And the hedge fund business we have now just makes it so easy. It's just very professional. It's following rules, and it's just great.
Yeah, I love it too. Yeah, really.
All right. So SMCI was our top big cap pick for the day. Let's see how it's doing. All right. If you want to see the, I don't know if can we recap it now? I don't know if I want to recap the whole thing. Let me see. We don't have enough people here. You guys help us spread this stream, guys. We got the value of this content. We got like 14 people on our YouTube and 2 people aside from us on our Twitter Spaces. What's going on here? We're not going to stick around for long when the audience is small. You help us grow this, and we'll be motivated to do it every day. This is the first time we're doing it on Twitter Spaces. We started YouTube last week, so it's our 2nd week doing YouTube. So the audiences are small. We got to build it up, and we may need your help to do that, because if we don't build it up, we're not going to do it anymore. So, but in any case, SMCI today was our top pick. They had a guidance. They increased their guidance yesterday. So that's one of my favorite types of catalysts to play. And that's why we made it. Now, I missed this news. If I had this news yesterday morning, SMCI was not on my watch list. I didn't know about it. I had to take a crash course on it. It's now on my watch list. So given the strength of yesterday's guidance, they upped their earnings. I'm not going to go through a little calculation. That's for our VIPs. If you become a VIP, we can give you the calculations. And, ultimately, I think that this stock is heading higher. Not even ultimately, probably in the near term. So I have like a 325. We're going to challenge, I think, this proximal high here of 329 and make our way towards the upper 300s. I know that's crazy after the stock has already come up from 100 to about 300. But the fundamentals and the sentiment, very important, being in the AI space, really make that a high possibility that SMCI is going to head on much higher, even from these levels. We got to look at DWAC. DWAC is breaking out of that resistance line that we showed you earlier at 2090. So, all right, I don't know what we're doing there, but just
we're skating out on the way up again. We still have nice little size, so we're scaling out. I mean, again, our plan is to be out by the end of the day, so playing it cautious. But it's looking good, man. Yeah, it's the biggest winner today for us.
Good job. Awesome. Oh, it is. DWAC's the biggest winner, not XXII?
Yeah, DWAC is bigger.
Oh, that's surprising.
We had slightly bigger size on DWAC because XXII, I think I have to say, XXII, if you put yesterday and today, it's definitely bigger than DWAC. That's for sure.
Right, that's right. Yeah, we nailed it 2 days in a row.
We put it down for the second day.
Dude, 250 to 540 over 2 days on XXII.
That's crazy, man. That's incredible.
Beautiful.
Yeah.
That was a lot of talking. So let's see. Let me see if there's any comments here. I don't see anything. I don't see any comments. Let's see.
Man, we need to pump this out more. We need to get guys coming here, joining in on the fun, and making money with us.
Yeah, we're having a lot of fun. We are having a lot of fun. Let's see. Let's go. Want to maybe bring up over here. See, RXRX is having a good day. We're not in it as of now, but that has a huge sentiment tailwind from the NVIDIA investment and the AI healthcare company. So definitely a fun one, a good one to be in, a good one that you think can help support because of that sentiment tailwind.
Yeah. RXRX, by the way, we did make some good money on it, but I guess we didn't have the conviction to hold it long enough for a bigger swing.
Yeah, and that's because it's a biotech, and I didn't have a great way of valuing, what this company could be worth as a biotech, and maybe that was a mistake, but in any case, we're doing great with other stuff this week. Yeah. So I don't really see anything else too much of note here on the.
Did you talk about REL? You spoke about REL short on the morning.
Yeah.
You spoke
so
about
yesterday morning was incredible. I woke up at 4 a.m. Why did I wake up at 4 a.m.? It was because we were changing the ticker symbol to PSQH, right?
Oh, yeah.
Right, on CLBR. And we had a nice little position. I was expecting a huge day, which we caught. So I woke up at 4 a.m. And what did I see at 4 a.m.? I saw news that TSM basically had bad earnings. So by 4:23 a.m., I had shorted TSM, shorted Soxel, okay? Shorted TSM, shorted Soxel, and also we ended up shorting REL, which I'll talk about in a second. And we ended up outperforming yesterday because, and by the way, that was the main theme of our 9 a.m. show. There's who's this guy? There's like some guy on social, what's his name? Dan Niles or something, right? Like yesterday at 3 p.m., 3:30 p.m., all of Twitter blows up because Dan Niles said that, TSM is a bad sign and I'm shorting semiconductors or whatever it is. And I'm like, dude, I said that at 9 a.m. It was the top story. And and the funny thing is, our top story for 9 a.m. yesterday morning was supposed to be REL earnings. And we're going to follow the ticker symbol change to PSQH. But instead, what was the number one thing I covered? I said, you know what caught my eye this morning? TSM had bad earnings. Now, those of you who've been following my show for like the past year know that I've never talked about TSM, ever, right? It's on my watch list because I know it's an important company. So like that's also like a very important thing. Like when we're watching a company for a long time and we have a certain opinion about it. Like I either am strongly against it or I strongly like it or I'm just ignoring it. And then there's a catalyst strong enough that we comment on it. That has proven to be inflection points. So we took that cue and I'm like, the fact that I'm looking at this TSM when the market's gone up so much and TSM is warning, I said, this is something that can trigger a market correction on the QQQ to the 20 DMA, right? That was something yesterday morning we had. So we sold off our RK first thing in the morning. We were shorting Soxel, we were shorting TSM. And then yesterday we also were shorting REL. Now we closed out the TSM and Soxel short for now. But we were shorting REL as well because they're also impacted by the same space and they had terrible earnings. Now REL we're shorting into a second day, but our size is smaller. Look at DWAC, keep going. So,
yeah, Ben, I interrupt you and just talk about DWAC for 2 seconds. I want to say it's good sometimes to talk about mistakes as well. And I think if someone would be listening to us, they would realize that a big theme of what you're pushing is that it's all about allocation. And it's all about, how much are you willing to risk on a certain trade and not going over that and sticking to the rule. And I think we played it perfectly with DWAC, with XXII, with PSQH, with those type of trades. And when we didn't do it, what happened with SPCE? We went too big, too fast, and we ended up losing some money on that trade. And I have to say, I feel like if we went big on DWAC, like let's say we did 5% on DWAC, right? This morning, when it started pulling back from that initial run to 25.85, and it goes all the way down to 18.50, we're like, we need to bail. We have too much money in this. Now we're down on it. Just cut it out. and now it's coming back up. We would have bought higher, and it would be like, it just messes you up, man. And allocation is everything. It'll make you win time and time
Yeah,
again.
that has been the number one thing that we've been working on and iterating in our hedge fund is how do you determine the right allocation size? So that's been a work in progress. It's improving and improving, and we're in a really good spot now. We're getting really good at figuring out the right allocation size and how we do it. You know, it's based on different tiers and risk levels and market caps. There's lots of factors we look at which determine what the allocation size should be. And I think it's the best way to do risk management. You know, when we started this, we had a whole bunch of rules on the hedge fund, like how do you do risk management? And we talked about like trailing stops and maybe doing like protect. It was right, like buying puts if you're up on a stock and selling the calls, right? So we talked about, and we tried implementing some of those, and it just even stop losses. And nothing works nearly as good as having the right allocation size.
Yeah.
So I mean, that's all you need. To be honest with you, like you don't even need stops or anything like that. If it's sized correctly, and you're in something that could crash or whatever, you don't need a trailing. You don't need to be, because also if you do stops, like you can get shaken out at the wrong time. If the story hasn't changed, you really should still be in it, right? So now you can hold on to a risky stock with the right allocation, and only sell really if the story changes, if the analysis changes, not simply because the price went below a stop. So it's all about allocation size.
Yeah, totally with you on that.
Guys, if you're enjoying this content, listen, I don't know that I'll be here again on Spaces on Monday because there's only 2 people here. I see the audience is growing a little bit on Rumble and on YouTube. That's good. But if you want us to do this every day, really go ahead and tweet this, like retweet it, comment on it, like get people to hear, because there's a tremendous amount of work we're doing to bring this content to you, and it's just not worth the time if you don't get a big crowd. So, but it is early. I understand. All right, we got 20 people now. 20 people, it's better than 0. So we got 20 people. But let us know if you like this show on Twitter. You're watching. Put comments in there. We need to hear your feedback. If you like this content, then maybe we'll do it again on Monday, and then maybe we'll do it every day. Right? If I'm not hearing any feedback from any of you guys who are watching this, then we might not bring it to you again on Monday. All right. So anything else to look at? It's 1:28. I guess we have about a half hour. I don't. Oh, here's some comments. So let's see if we take a user Q&A here. How about Rel? We just talked about Rel. Thank you. Like on YouTube. And yes, thank you. Go ahead and like. I guess it helps the algorithms. Like, comment, share this link. Really appreciate that. All right. Other final things you want to cover, Joseph?
I'm trying to look at my list over here. I mean, it's nice to see things like bouncing from yesterday. Like Tesla's still below.
Oh yeah, I think I want to cover RK. Yeah, cover RK after. Yeah, go ahead.
And maybe it's Tesla's still below 20 DMA. Nvidia, like you mentioned earlier, looking a bit stronger. But even though now,
Tesla reclaimed. Oh, it's trying to reclaim the 20 DMA. It's trying.
And Nvidia, honestly, man, Nvidia looks like it wants to go down to the 20 DMA.
Well, that's okay. As long as I'm above the 20 DMA, like I'm just like hanging out. I'm on a beach having a martini. Like 20 DMA is fine. That's like your strongest bull line. Like we don't need to worry about Nvidia at all. Like it can go to 436. We're good to go. So
I hear that. And I have to say, like what you were saying this morning about RK possibly doing its own thing, whilst the QQQ can keep going down, but the RK can bounce hard off that 20 DMA and all its associated stocks.
I am more bullish on the RK than I am on QQQ, as we talked about this morning, but also really the last few months when we saw that inflection point, which was the 50-week moving average break. And then we had another technical inflection point just a few days ago when it broke, 45.46. Yep, it broke 45.46. That's another major technical breakout for RK. And of course, this is not just technicals. It's coming with the backdrop of inflation is getting lower. Expectations for interest rates are getting lower, which is good for risk assets and growth of companies that need to, rely on capital and the cost of capital. So that all makes sense. Like the fundamentals are matching the technicals, and QQQ has done much better than RK, and especially the big mega cap tech, which could use some pullbacks and consolidation. So again, the next coming period, I wouldn't be surprised if QQQ maybe goes into a period of consolidation or pullback. Whereas RK, I really think this $46 level is super viable, man. It's a double support. You have a 20 DMA rising to match this candle breakout at $46. That's a very strong support level in the backdrop of this longer-term breakout at the 50-week moving average, in the backdrop of inflation coming down and moderating. That's really good for growth assets. I actually just recently bought RK for my IRA, which I've never done. I just bought it the other day.
Very nice. Good for you.
So we'll see what happens. But again, I would not be surprised, to your point, to see Microsoft, the big caps, having some pullbacks and consolidation to deal with, while growth assets do a little bit better. But we do have FOMC next week, and our opinions can change every single day, right? Depending on the new data that comes in, right? You have to analyze the new data every day, and you have to be willing to change your mind. All right, let's see what we got here. Just found you guys today from Twitter. I've been watching your stuff a lot now. Very good. Thank you. And then we got a comment from Cal. Ben, you're always appreciated. Been following you for a while. Through all the XXI has been a drama, man. It really has been. And thank you for bringing up XXII. Let's just talk about that a little bit more on XXII. So XXII, they have a funding issue. Listen, I bailed when they did 2 consecutive fundings, like a few days apart, like a week apart, and with very high. It's like death spiral financing. I can't get into all the details right now. It's a toxic financing, not necessarily a death spiral, but it's more of a toxic financing. And to me, it made the company uninvestable. So I had to sell my long-term shares, and I did that at $275. But I've been back in a big way on these trading shares. So XXII, there's a huge event coming up in August, an FDA decision that can be very, very good for the company regarding very low nicotine content of nicotine in cigarettes and menthol. And if the decision goes their way, XXII can be positioned to be the only company that has a product that's can fit some of the FDA's criteria. So this is a massive potential catalyst for XXII, but I can't have size in this because I don't trust management anymore, because they're doing toxic financing. They haven't gone out and said we now have enough money so we don't have to raise money again. If they go out and say that, then XXII becomes investable. For right now, it's a trade, and it could be a very good trade. By the way, I was just telling Joseph, like, especially with this FDA decision coming up, it's not beyond the realm of possibility to have like one huge candle that takes you to 10, 12, even $15. If you look at the chart, all of that's possible. This thing has been down like 90% in like a couple months because of the toxic financing. So those kind of returns are possible in XXII, but it is, in my opinion, risky until they finally tell us they have enough money that they can reach profitability without another raise, and that's going to be the time when I get in for the long term. Right now, we're just swinging this. Thank you, Cal, for your comments on that. E. Lee, thank you so much. Love the show. I like this. I've been watching every day. Lots of great content. Thank you, guys. And then we got Doug on. Okay, I still have RRGB. All right, we still have RRGB for a whole week. All right, I've been in this. It's been one of our top swing ideas. Just hasn't broken out yet. Actually broke down a little bit this morning. To me, the chart still looks good. It does have room. A couple things to mention, right? It can move to the 20 DMA, yes, and still be bullish. So it can move to the 20 DMA, and the thesis is still intact. I'm looking for an $18 price target on RRGB. By the way, it's not just technicals. Again, why is this even on our radar? Because fundamentally, they've had catalysts. They had recent catalysts, which is good for fundamentals. Okay, and then we'll get to the short position. What's the recent catalyst, which is good for fundamentals? They're doing sale leasebacks. They're selling their properties, and they're taking that money, paying off debt, and they said they're doing share buybacks with that money too. That's tremendously bullish from a fundamental point of view. So that's a fundamental tailwind you have. Then you have the sentiment benefit, the sentiment tailwind of the fact that this is highly shorted, 21%. Why is that a sentiment benefit? Because that's a trend right now. That's a play right now. Ever since RK broke out of that 50-week moving average, what you have are stocks like Carvana breaking out. Oh man, I forgot to talk about Carvana. We put out a video today on YouTube. I got to put it on TikTok. But in any case, that's a signal when RK is above those key moving averages, you can get these stocks that the people are attacking it, trying to cause short squeezes. So you have so many things like in the favor of RRGB, from fundamentals to catalysts to sentiment. And now you have this technical, huge W pattern forming. So you have to break out of 16. And then you break out of 16, then you get to $18. That's your target at 200 DMA. So you still continue like RRGB. But one thing to keep in mind, Doug, is one, we could be wrong. And two, because we could be wrong, you got to size it right and have the allocation right. You don't want to blow up your account because you're wrong. Listen, I have to be honest with you. I think like our show, a lot of our picks are accurate like 90% of the time. But when you're right like 90% of the time, it feels emotionally like you're right 100% of the time. And that causes you to say, okay, I'm right so often, I can just go in huge size. I can get into call options. And that's happened to me. I went through this. I went through so many cycles in my life. I've been doing this for 25, 26 years. And the first blow up I had was back when I was on StockTwits and I didn't have StoryTrading, I didn't have anything. And I just had like great stock picks on StockTwits. I was consistently making 10% a month over the span of like 2 years. 10% a month, 10% a month, 10% a month. It was crazy. And my friend came up to me and said, Ben, you're so like accurate. Like, why don't you do call options, right? So I'm like, call options, that's risky. Why would I do that? So I said, all right, let me give it a try. And my first call option trade, I made $200,000 in 1 day on a $5,000 bet. And this was when Yahoo announced the spin-off date for Alibaba. So Yahoo was on.
Oh yeah, you told me this story. Yeah.
I liked Yahoo for the sum of the parts valuation of Alibaba, and Alibaba's going to spin off, but there was no exact spin-off date. And I had experience in the past when Palm Pilot spun off, when 3Com spun off Palm Pilot. You're too young to know this, I think, Joseph. But Palm Pilot, that's what it was popular before iPhones and Blackberries, right? So when 3Com was going to spin off Palm Pilot, what happened was the stock just exploded. But when did it explode? As we watch XXII go back to its highs, it exploded when they put out a definitive date. When they put a date that the spinoff for Palm will be on X date, that's when it exploded. Now you start learning about the market. Think they don't care that there's a particular value, and this goes to a stock like what's that uranium stock we used to play? The lithium stock that has uranium.
Oh, LIAC, AMLI.
So AMLI, right? So AMLI has this store of value that they want to spin off uranium as a separate company, right? But you don't play that until you get the catalyst of the date. That's how the rest of the market thinks. They want there's a time value of money, so they want their money put to work in the smallest compressed space of time. They want the certainty that it's actually happening, right? So like AMLI, we're watching, and we'll only jump in big size if they say, hey, the date of the uranium spinoff is August 15th, then you pile in big, right? So these are the things I've learned in terms of market psychology. By the way, they just announced the other day they're not doing the spinoff anymore. So now you go back to 3Com, and we learned that. I learned that experience. So when they give a date for Palm, that's when. So Yahoo, it was a Friday morning, and they gave a date. They said, okay, Alibaba's spinning off on such and such a date, and I already knew like the sum of parts analysis of how much Alibaba could be worth. And right at the open, I jumped into call options for 5 cents that were like several dollars higher because I was expecting a rapid re-rating, just like I talk about every morning on the StoryTrading shows. And it rapidly re-rated that day. And these 5 cents call options went to like, I don't know, $2, $3, $4, whatever it went to. Man, it was a trip. And I didn't know I had to sell the call options, right? I'm like, I didn't sell the call options. They're worth $200,000. I call up E-Trade. And I'm like, I have these call options, but I didn't sell them. Do I have to sell them or how's it work? Do you just give me $200,000? And I'm like, bro, what are you doing? No, it doesn't work like that. Like you have to have money to be able to buy like all these Yahoo shares at whatever the strike price was, $40, and then you have to sell it. I mean, it's like you're supposed to sell the call option before the close, they tell me. I'm like, I didn't know that. So anyway, it was like a panic. I'm like, oh no, like what if I don't do anything? They're like, you can lose all your money. You're not going to get this. Like, what can you do for me now? Okay, it's like, this is what we're going to do. We're going to sell short Yahoo and after hours, right? And once you sell short Yahoo and after hours, then
very cool, yeah.
Then we can exercise the options to buy it, which covers your short, and then you pocket the $200,000. But anyway, why am I telling you this story? Because that was the beginning of a terrible cycle for me that took years. Where once I had the rush of making that much money very quickly, I started losing discipline, and I was chasing that rush for 2 or 3 years. And my account just went down and down and down and down and down. And it took me many years to regain the discipline to be able to do it the right way. So why did I even talk about this? Did someone talk about options? What was the story? I don't even know. All right. All right. The moral of the story is I was talking maybe to Doug about RRGB is that even if we're right 99% of the time, you can't take risks. You gotta assume that you could be wrong, and that's going to dictate how much money can I lose in RRGB. And you say, okay, I'm willing to lose 5% of my account or whatever. It's not going to go to zero, but whatever it is, whatever your risk tolerance is, and then you don't have to worry about it so much. You don't have to, it's what it is. And then if the story changes and you end up losing the money on the trade. So what? You'll be right on the next trade. So you end up losing money. And the thing maybe breaks the 20 DMA, or there's a bad catalyst that comes out, and that's when you sell and you're out and you lost money. Great. Okay? It's just a game of odds. You're not going to be right every time. Doug. Okay? That was for Doug. Let's see what else we got. All right, guys. I think we got to call it a day here.
Yeah.
Else on Twitter. We got Derek and Ross. Okay, if you guys like the show, let us know. Put comments on Twitter. And I'm going to leave you with a little video that I don't think our Twitter folks will hear, but everyone on YouTube and Rumble, you're going to learn a little bit more about how story trading works. And if you want to be part of our VIP community, go to storytrading.com/app, and you can download our app for free. And Joseph, tell us more about your hedge fund.
Yeah. Okay. So we right now.
Go ahead, real quick. Just find out more information on.
Yeah. We started a hedge fund based on the story trading process. I was part of the community for a while, seeing a lot of success from the trading, following Ben's thesis. And I approached him, and we started a Ascending Capital fund. You can check us out on our website, ascendingcapital.com. And this is our third month that we're operating. We're getting better and better every day, adapting to the market and changing the process where need be. And it's beautiful. I handle more execution, and Ben handles what he does best, is the market sentiment and thesis and all that. And it's beautiful. And the teamwork is really working out. And yeah, check us out, ascendingcapital.com.
Excellent. Thank you, Joseph. We'll see you Monday morning at 9 a.m. And for everyone else, we'll leave you with this video. And join us, storytrading.com/app. We'll see you Monday morning, 9 a.m. for exclusive VIP show.
It's not easy to understand why stocks go up and down. But even in volatile markets, there's always a discoverable and logical reason behind price action. Story Trading is a social investing community of investors who share information to uncover the hidden stories behind the trade through the 4 pillars of fundamentals, catalyst, sentiment, and technicals. All price action can be understood through the lens of these pillars, allowing for a holistic view that empowers better decision-making. Only by understanding markets can you beat them. Join our community today and start making sense of markets.